Welcome everyone to the afternoon's session on the regulatory stage. This session seeks to look at regulatory challenges that fintechs face both locally and also in trying to access new markets. What kind of regulations can be put into place to support their move into cross-border functionality? We have a stellar team in front of us today. Starting from my left here, we have Kajeneri Christian, who is the Director of Payment Systems, National Bank of Rwanda. Next to Christian is Dr. Jutaro Kaneko, Deputy Commissioner for International Affairs, the Financial Services Agency of Japan. And on my far left, we have Kwame Oppong, Director of FinTech and Innovation, Bank of Ghana. So I'm going to start with Dr. Kaneko-san, who, as I said, is from the Financial Services Agency. Dr. Kaneko-san, Japan's fintech market has grown steadily over the recent years, driven by digital adoption, regulatory support, and a focus on financial inclusion and supporting cashless transactions. I understand that the FSA is working to balance innovation and consumer protection. I invite you today to share a little bit about Japan's landscape as far as fintech goes and some of the work the FSA is doing in this place.
Thank you, Raadhika, and good afternoon, everyone. It's a huge honor to be here today. I'm very happy to share with you the landscape of the Japanese fintech market. So, first of all, I'd like to briefly explain the responsibilities and functions of our agency, FSA. FSA is an integrated regulator over all types of financial institutions, including fintech firms. And our mandate is to ensure financial stability, market integrity, and consumer protection. In this regard, we develop different regulations and supervisory framework also in the context of fintech. In the first place, if I say something about the Japanese fintech market, it is flourishing. Well, as for payment services, the cashless payment is increasing in amount, reaching about 40% of all the payments, and QR code payment in particular is widespread across the nation and across the country. On the crypto asset front, we introduced relevant regulations ahead of the rest of the world already in 2017, and well, the transaction amount and accounts number are both increasing steadily, as well as the tokenization products such as security tokens. On the AI, well, as far as I know, the industry has not yet started providing B2C services like in investment advisory using generative AI, LLM, specifically speaking. So next I'd like to mention our policy approach. Well, I don't want to sound anti-innovation. So, well, in my mind, good regulation is always a prerequisite for sound development of financial market. So, we are taking rather cautious approach through repeated dialogues with all the stakeholders, including market participants, to strike good balance between enabling innovation and controlling the risks arising. In order to further promote the Japanese fintech industry, I think we think it very important is to bring more competition from outside, and at the same time we want that the Japanese fintech firms to be sophisticated through competition in foreign markets. From both perspectives, we place much value on these opportunities, like here in Singapore. And as you might have seen on the screen, JFSA will host next Japan FinTech Week in March 2025. So, well, through the improvement of visibility, both in the country and abroad, I believe that the Japanese fintech firms will enhance their capability. So please visit us in Japan next spring. Thank you very much.
Thank you, Dr. Kaneko-san. Turning to Kwame, Ghana's fintech market has also seen very serious rapid growth, fueled mostly by mobile payments. You have a very young and tech-savvy population and a very supportive regulatory framework. A key and very proactive player has been the Bank of Ghana in this space, and we know that you introduced regulations like the Payment System Services Act to support fintechs and have laid the groundwork for financial services, digital payments, and electronic transfers. So today we'd like to hear more of, firstly, what your landscape is like, what the frameworks are enabling this, and maybe what some of your challenges that you're still facing.
No, thank you very much, Raadhika. And this is a very important conversation for us. So Ghana is about 30 million people, a little over 30 million, say 33 million people. And we also have a significant youth population. Over the last perhaps 2 decades, a little over 2 decades, we made a strategic decision to look at modernizing our payment system to anticipate the growth of retail payments. So at the time, our focus is on retail payments. And so back in 2007, I believe, we explored the idea that had come up called mobile money. And we had our own idea of what it could look like in Ghana. So a framework was put together to effectively accommodate that type of concept. But 4 years prior, we had acquired an RTGS, which allowed a certain level of efficiency in the market, so there was no more bilateral settlement amongst the banks. Fast forward, the RTGS was, we built a whole national switch infrastructure and organization around it, owned by the central bank, and this is important, I'll come to that later in this conversation. It's entirely owned by the central bank 100%. There'll be future considerations as to that ownership conversation, but the goal was, one, we needed to have a more efficient and dynamic retail payment ecosystem. Two, we also needed to ensure that there was some level of public infrastructure provision, or at least intervention, that created an open rails for future innovators, whether banks or non-banks, to be able to ride on it to develop innovation. Subsequently, in 2013 somewhere, we realized that our expectations of what the market should look like versus the reality was not quite matching up. And so we did a very deep and honest and open diagnostic and a very humble diagnostic and realized regulatory constraints was one of them. Fortunately, I think our posture had always been, and we had support from an entity called CGAP, a think tank from the World Bank Group and others, but the idea there was, could we look at regulatory enablers as a mechanism to catalyze innovation within Ghana? There are several benefits to this, and I think for us, it's a developmental issue. One, it's an opportunity to create employment. Two, it creates an investment inflow opportunity as well. Three, it enhances the efficiency of our payment system itself. And finally, it also gives our local entrepreneurs an opportunity to demonstrate their creative potential. And so these were all considerations for which we decided to see how we can enhance the sector. And so we fast forward to somewhere around 2015, we had introduced a new mobile money regulation, and for the first time, we acknowledged the fact that there were bank actors in this space. Now, we knew they were there, but they were largely tech players who worked under the licenses of banks. The question is, could you create an objective and an agnostic regulatory framework that allows a bank or a non-bank to participate in this emerging space? At the time, primary focus was on mobile money. Through that process, we were able to also, in fact, as that process was going on to develop those regulations, you had some other entities who were largely considered aggregators because there was no interoperability among players. So those entities, who were basically the early stage fintechs, grew in size and scope such that even though we had put in place a guidelines for mobile money, it became necessary to have a broad and large and all-encompassing law that looks at all the small regulations we have put out there and consolidates it into one. So that's how we create a Payment Systems and Services Act. Along this journey as well, a few things were happening, and this is where it's important for the regulatory response. How we structured ourselves as a regulator was also keeping pace with the market's evolution. So mobile money in its early days sat in a small unit somewhere in the banking department. Then ultimately, when the regs were put out, the first regulations, there was an office. Then we created a payment system department. But by the time you had a certain number of fintechs on the market looking at all kinds of things, from payments, lending, merchant pay, all kinds of innovation, it became necessary that we also establish a fintech and innovation office that looks at doing two key things. So the usual licensing and supervision, but also this time around have a mandate for promotion. Because obviously, if you look at the whole fintech space, there's an opportunity for us at a policy level. So how can we take advantage of it in a strategic way that could benefit us as well? So it's not just about you can do this, you cannot do that, but can we guide the development of the market? So we had that in mind as well. Subsequent to that, we came out with a few policies. So again, we continue to scan the environment, see what the innovators are trying to do, scan the global landscape as well, see some innovations that are coming up that we need to have a policy response to. And so we put in place a crowdfunding policy, which, to be fair, I think many of you have heard a term like Susu. It's a very common practice in Africa, but the problem is it was happening informally. Investors or contributors were not being protected enough. How data was being shared in itself had its own constraints. There's a risk of AML there. So we thought we put a framework in place that once again organizes and better guides the development of that activity. We also looked at the inward remittance space. Now, remittances are a big source of forex inflows for Ghana, and also a mainstream and a main source of income and livelihood support for many Ghanaians. And with the introduction of fintechs in that space, we saw efficiencies in terms of cost and even timing with which people receive their funds, the timeliness. And the next evolution of that is that beyond being able to receive these funds digitally, you could also be able to build remittance-backed financial services. So I'm not just receiving these funds, but what else can it be turned into? So we tried to look at the space. We restructured our licensing framework to reflect different categories and the different risks those categories presented, and have a very well tailored, at least at the time is more optimal, an optimal framework for balancing the activities of fintech, defining a license category for them, and a commensurate requirement with which we could oversee the onboarding process and the licensing process. And subsequent to that, we've continued to work closely with the fintech ecosystem, both enforcing our regulatory mandates, but on the other side as well, working with them to build on certain issues that have been constraints on the market, enhancing the commercial framework for instance, our national switch and our digital payment rails is very important for us because fintechs need access to those public infrastructure to be able to serve customers at a lower price point, which is very important. And when we continue to do, explore things like CBDC, which we think over the long term will be a very important component in our broader framework. And one of the things that we do in Ghana, and we highlight in our reports, if you go to the Ghana booth, is that we look at CBDC as currency, and it should be an enabler of the ecosystem. So it really fits into the ethos of how we see the sector, how we see its development, and our continued engagement is along those lines. And we hope to continue to talk about this a bit more as this conversation goes on. Thank you.
Thanks, Kwame. Christian, Rwanda is also one of those notably growing markets, actually one of the fastest growing markets in Africa. And you have had a government-led digital transformation. I've always heard your president say that he wanted your country to be a smart country, and everybody has internet and access to services. You have embraced financial services as your Vision 2050, and you aim to position yourself as a regional hub for innovation and technology. So today, tell us how you are trying to reach this goal. What work have you put into place? Do you foresee any challenges in Rwanda? I'll let you take the floor.
Thank you, Raadhika. My name is Christian, and I'm from a small country in Africa, overpopulated, 14 million. I invite you all to come and visit. A few facts about Rwanda is our e-value on mobile wallet is 211% of our GDP, 211%, huge penetration, 96% of financial inclusion of non-bank and banks, quite good. And just to reflect on our introduction statement, what's happening in Rwanda, we have created a financial center that is driven fintech strategy. It's called Kigali International Financial Center. Part of the team is here, and us and the central bank, we have partnered with GFTN, former Elevandi, to host similar to SFF, we call it IFF, February. I was inviting my brother, Dr. Kaneko, to come, and he said, are you also coming in Japan? So we will see who will be more courteous. I've already promised to attend the one of Ghana. Ghana, they have the same. So we've created a platform similar to this one, not the same level, where we can portray what market players are doing. Secondly, what the government is doing, taking me, that people that have been on the private sector side, market player, to come and be a regulator, because then you understand the challenges of fintechs, where you can create a space that's not over-regulated for people to test, and even boost models like sandboxes, where you can come and test your product for a certain period, 6 to 12 months, and then you can innovate in your period. Also attracting investors, where you can create prototype, not just for the Rwandan market, for the African market. As we speak, there are already 13 to 16 double tax regime and ongoing conversation of license passporting, even with Ghana, where if you register in Rwanda, you are able to operate in Ghana, or if you register in Ghana, you are able to operate in Rwanda and continue for regional integration and creating a common market. What we've also done is categorization of licenses, so that you don't have a one-size-fits-all. You have an electronic money issuer, which is the largest, category 1. You have a second category, which is an aggregator. You can just do hold money, T+1, and you settle the following day, online aggregation. And then you have category 3, which is remittance, so international money transfer. And then you have the last one, which is money initiation or payment initiation, which is the lowest, and as low as 1,000 USD to get one-time fee to get a license. Very friendly. Today in Rwanda, in 24 hours, if not 2 hours, you can get a business registration, you can open your company, and the following day, you can start transacting. You can get your license in 90 days. Me and my brother over there, we are fighting to be the shortest turnaround period to get a license and kill this whole bias myth that getting a license, regulators try to make it complicated. We are an enabler to our economy. We should be able to give you a license in the shortest period and in the most compliant manner. So these are a few initiatives. The list is long. It's still a journey to create more regional integration and more market players. One thing that struck me is during the presentation, opening remark of Mr. Ravi, Africa, I don't know how many people took that picture, Africa is growing 13 times, but we have the lowest value of transaction. Other markets are 12.5, 6 times, but the numbers are billion, 600. I think Africa is 65 billion. I felt bad, and I'm calling you to come to Africa, come and invest, and the market is open. There's a huge population, there's huge need. This whole myth that people tell you that we don't have infrastructure, it's a lie. Come and see. We have multiple needs, multiple vulnerable and multiple population that don't have access to formal financial service provider. Thank you.
Thanks, Christian. Dr. Kaneko-san, coming back to you and moving a little bit from the domestic side into how are we thinking about supporting fintechs in the cross-border space. And maybe you can share a little bit about what the FSA is doing to support this, particularly looking at issues of AML, CFT, data, collaboration between different authorities in the ASEAN region. We would love to hear how this is transpiring in Asia.
Thank you for the very good question, Raadhika. Well, FSA is a part of different international standard setters, such as FSB, IOSCO, BCBS, IAIS. So, we are actively contributing to develop international standards, also for fintech regulations. And we are always doing our best to share our experiences to have developed our own laws and regulations in this regard. And in order to promote the international activities, both outward and inward, first about the inward accession from the foreign countries, we launched a one-stop contact point for fintech companies, foreign fintech companies, considering to enter the Japanese market in 2017. To date, we have received over 2,000 inquiries, mostly from remittance and payment service providers. So, about the questions are related to the legal and regulatory requirements on licensing, and etc. And about the support, our support to the Japanese fintech firms to go global, we find it very useful. As I said, these festivals, so that the Japanese companies can increase their visibilities. And I want them to be stimulated from dialogues and exchange of views with different stakeholders, including investors. And coming back to the regulation, I think it is very important to ensure level playing field, irrespective of the nationalities of the fintech firms across the universe. In this regard, we are trying to promote the data sharing, including the privacy data. Big data is undoubtedly a source of innovation. On the other hand, security and privacy should be completely protected through the use of masking and other techniques. And I'm also concerned about the risk of monopoly of information by IT platforms. So Well, also in this area, I think that the supervisory and regulatory collaboration between different jurisdictions, including African countries, of course, is very important. Let me stop here.
So coming both to Christian and Kwame, I mean, there's always a lot of talk about the African Continental Trade Agreement. We talk a lot about how we can facilitate payments amongst the various countries. Of course, Africa is completely diverse. I know the two of you have worked on different areas. I would love to hear how not only are you looking at cross-border issues, how are you collaborating, but also if you can touch a little bit on perhaps the Pan-African settlement system. Are there challenges? Are we doing the right thing? What else can we do to actually facilitate both trade and payments across the continent? And this will obviously support the fintech industry who wants to have access throughout, not just in Rwanda or just in Ghana, but as you said, there's a whole continent with opportunities. How do we make that happen?
Kwame is my big brother. I'll let him start.
No, so I think first of all, there's one important acknowledgement that we have to make. And the fact that across Ghana, Japan, and Rwanda, you're seeing regulators bringing stakeholders together from across private sector, whether investors, service providers, you're bringing policymakers together, and they themselves availing themselves to a conversation to try to make progress. That's the first and most important thing. But it also indicates that we recognize the role that regulators have to play in addressing some of these things. Secondly, I think it's also important to remind ourselves that besides PAPs, so there are actually all kinds of mechanisms for sending money across border. So for some of you, you may hear the idea of cross-border payments in Africa and why it's a high priority, and you may not understand it. The reason being that majority of people are actually using services that come from fintechs. So in Ghana, for instance, the majority of our citizens are using mobile money, about 90% penetration. The challenge is those kinds of products and those kinds of business models are inherently incompatible, at least from a viability standpoint, with many of the traditional mechanisms in place and infrastructure in place. Because let's not forget, at least there's a corresponding banking system. It's been there for since, 900 years ago, when the Knights Templar built a whole infrastructure along the protection routes for pilgrims, and it has evolved into what it is today. So it's been perfected for centuries. The challenge is, in the global south, the business model, and particularly the commercial model around it, is incompatible with things like the mobile money models. So how do we make sure that I, as a simple, humble citizen living somewhere in Ghana, I can actually buy something from Rwanda using mobile money or using a fintech app, for instance, without a price point, it being at a price point that is so prohibitive that it makes no sense for me to trade. And this comes back to the broader picture of why we're not seeing things like as we're trying to advance a continental free trade area, why we're not seeing a lot more activity from either an e-commerce standpoint or more MSME type activity. So we have to be able to solve it, and that's why I made the point earlier that establishing something like a national switch, putting together real-time payment rails that allows us to be able to our ecosystem of service providers to be able to facilitate payments among themselves interoperably at a reasonable price point with the right level of governance. It's important that we have things like that in place to be able to intervene in this problem. The next thing is, how do we then, again as a coalition, recognizing the fact that perhaps we're not going to get everybody to be at the table and ready to go, because typically these convergence criteria can work for country A and B, but C, D, and E are not ready. And for that purpose, we don't actually make progress. So could a coalition of the willing, which in this case we're considering ourselves as pathfinders, could we collaborate amongst ourselves bilaterally as a starting point and invite participation, reach out to every other central bank within the region, agree on things like framework, agree on things like governance, and at least you leverage our convening authority as central banks as well to bring the banks, the fintechs together and start somewhere. We're doing this in partnership with GFTN. I'm still getting used to the name. Formerly Alivandi. We're doing this in support with them because of the experience that MAS has also had with facilitating interoperability at a national level or at least multi-country level to see how we can start this conversation. It may require multiple platforms. It may require, one platform may be enough. But we, for instance, just approved into our sandbox, and we've had a regulatory sandbox that we established in 2021. It's a multi-tenant sandbox, so it allows multiple regulators to be in that space. And the idea there is we've just approved one that does Ghana, Nigeria, and the goal is how can we build a closer relationship with Rwanda, for instance? Regulatory-wise, we have similar principles, so we're close enough. So facilitate payments between Ghana and Nigeria on the mobile money level and explore at the banking level and sort of grow from there. Also explore things like license passporting, which makes it easier, right? Because the size of our countries, while there's a lot of activity, it's still 54 countries, depending on which count you're using. And at any point in time, for a large business or investor coming into this region, it is tough. It is tough to deal with how many regulators. So could we find mechanisms amongst ourselves to simplify these things and create a large, trade area so that investors find it more attractive? You get one area and it's perhaps about the size of, reasonable enough size that it's fine investing at a certain level and a certain ticket, so you get the right investor profile. But I think there's a significant role that regulators have to play, not just in participating, but in leading that discussion. So I'll turn it over to Chris, perhaps to add a word or two.
Thank you, Kwame. Ghana is quite advanced, and happy to share my insight with the fear of not repeating what he said. If you think of the traditional banking success story, is the interconnectedness of systems or interoperability. The success of the traditional banking system is because banks talk to each other. The biggest challenge, and I'm answering the question on the screen, the biggest challenge fintech have today is not regulatory, is that systems don't talk to each other. Most fintechs are silo. From the value chain of peer-to-peer, P2B or merchant payment or acquiring or cash out, systems, people have built China walls. They don't talk to each other. That's the biggest challenge that we have today. In Africa, I don't know about other areas. So it's interoperability. The biggest challenge that Africa has today, one is movement of people, movement of money, and movement of goods and services. If I want to leave Rwanda to Senegal, it takes me 2 stops, similar to coming to Singapore. When I was coming to Singapore, I had 1 stop in Nairobi, Bangkok, then here. When I have to go to Dakar, Senegal, I go to Nairobi, Addis Ababa, then Senegal. It takes 18 hours to travel a bird fly of 6 hours. Movement of people. Movement of money, what he's telling you, for money to go to Kwame, if I'm sending him, I have like 4 intermediaries before it gets to him. So you have a challenge of KYC, you have a challenge of fraud, and you have a challenge of currency convertibility and high costs. Just money between one country and another country. And mind you, we have a similar telco. MTN operates in the 2 markets, but even within MTN, they don't talk each other. They have a bank and a fintech in between to complete that transaction. If I want to buy anything in Ghana, they have beautiful attire called kaftan, dress code, African. If I want to buy, in Rwanda we don't have them, we have other things. If I want to buy any kaftan from Accra, it needs to be, there is a dispatch center in Dubai before it comes in Kigali. So it will take between 1 week and 2 weeks. Those are the challenges that we have in Africa. So the free trade continental area he's talking about is to reduce that distortion. And it's sad that we have to say it here. It has been a conversation from 1947, Kwame Nkrumah, their founding president, said, and I told him earlier in a podcast, Africa will be fully liberated if we are fully united. Now, and this is where what he said, we are trying to do bilateral so that we can create a ripple effect or domino effect to say, can we upset the status quo and say this is doable? Ghana and Rwanda, using a platform like GFTN, can we harmonize our regulation? Can we do license passporting? Can we create a common market between the two countries and then show that this is a proof of concept that this is doable, and then we bring on board other markets? This is what we're trying to do. Thank you.
Post Raadhika, let me add something important to that, and I'm happy Chris brought this up. There's always the question of why not pursue some of the ongoing efforts. It's because if we don't get up, we think the status quo is just not going to work, period. It will just be one of those running around activity, really not worth anybody's while. And that's why we've determined we're going to go about it this way. Because let's not forget, there are people doing all kinds of blockchain innovation, Web3 level innovation on the continent, even in Ghana. Right? When we started, we recently put out a draft framework for digital assets. The feedback we're receiving from local tech providers and local web developer and local developers is quite interesting. Many of them are actually living there and working overseas, which comes to the big issue of labor and labor mobility and all of that. It's already been there. It's a thing that's happening. Secondly, there's already a dynamic ecosystem that is growing across these countries, and it's becoming clear to all of them that it's not enough to be in one market. And for all their struggles, they are learning how to expand internationally, go through certain processes that perhaps their counterparts in larger markets may not have that immediate burden to, but it's also grooming those entities to have a better appreciation of foreign market expansion in a way that is very different. And finally, let me also add that this has never been a technology problem. I'm sure you've seen some of the announcements we made from 3 years ago till now, going all the way from working with MAS on the Universal Trusted Credentials, using the emerging standards in Ethereum at 3525, which is the semi-fungible token. We've used it to actually facilitate a cross-border trade between Ghana and Singapore, where we use CBDC on our side. We piloted an ECD, which is a Ghanaian central bank digital currency, and purpose-bound money using an XGD from here. So it's not a technology problem. We have enough resources amongst ourselves, as a global community, and even domestically, to really figure out some of these things. It's a matter of political will, which is often not said, and the determination to start. And so our philosophy between the two of us, or at least our two central banks and ourselves personally, is to start small or think big, start small, but start now. And that's what's driving us.
So personally, I love the passion, and of course, as GFTN, we're very excited to work with you and collaborate with you on this particular project. I certainly agree that it is an issue of political will at the end of the day, that we want to change and we want to do better for the continent. What is also exciting is that when you look at the three of you here, the fact that we are so diverse in such a global community and that we are collaborating and learning from each other. What works in Asia, can we take it to Africa? What works in Africa, can we take it to Asia? It's actually what we're all about as a network. And I think, we actually, the three of us here, four of us together, epitomize this wonderful collaboration. We've got a minute. I don't know if you have any final comments. I'll give you a chance, Dr. Kaneko-san, to, if you want to say anything. There is a question on the board, if you wish to answer it, and they are asking, what is the regulatory challenge you're personally most excited to overcome in 2025?
Interesting question.
It's a good way to close.
Well, actually, there are so many agenda for us regulators, so it is quite difficult to pick up one. But most excited, then I would flag streamlining and the cross-border payment and sound use of generative AI. Yeah. Well, if I may touch on each of them just briefly. Well, regarding the cross-border payment, as you may know, FSB is taking initiative on improving four key performing factors, namely access, cost, speed, and transparency. And it is always a headache to balance different values. In this context, what annoys us is the coordination between AML, GFT. Of course, those crimes are totally unacceptable. So we want to spend as much time as needed, but based on the risk-based approach is advocated, and we are trying to find somewhere in between to achieve both goals, AML, CFT, and enhancement of speed, for example, of cross-border payment. In this regard, the international standard setters are very active in outreach activities. So in each regions, including Africa and Asia, they have specified dedicated outreach group to exchange views with members and non-members. If I may, I'd like to also introduce the interesting discussion going in the region of Asia. Although I may not be the best position, I was responsible for financial cooperation in the framework of ASEAN Plus 3, which is ASEAN 10 member states and China, Japan, as well as South Korea. And one of the agendas is to digital financial cooperation in digital finance. So, in this regard, the Japanese government committed cooperation to contribute to the ASEAN regional project to integrate their retail payment system networks based on QR code, which was invented in Japan. And as for the Gen AI, Japan is currently in the process of developing a discussion paper which will serve good food for thought for the industry and also for us regulators. It could be useful to refer to when thinking about good methodology on risk analysis and monitoring of financial institutions. And in order to useful data for development of the discussion paper, we are currently conducting a public consultation, which is open until 15th this month, November. So, we always prioritize bilateral, mutual, two-way discussion and exchange of views with industry, irrespective of the border. Sorry.
Thank you. 2 seconds each.
No, I think I'm fine. We're happy to carry the conversation outside of here if anyone wants to. Thank you.
Yeah, I want to invite you in Rwanda for IFF. If you Google IFF Rwanda 2025, last week of February, 24, 25, he's going to invite you as well, 24, 25, 26, please come, please register. And if you Google Visit Rwanda, you will see we're beautiful. We are known to be the Singapore of Africa. Sorry, Kwame. Kigali is very clean, very safe, At 4 a.m., you can walk as a lady, no one will touch you. Easy to invest, beautiful people. Welcome to IFF.
A round of applause for, and what he said about Rwanda is actually true. I have to agree to that. But no, similarly, we're all collaborating on these events. We're also having a 3i Africa Summit in May 2025 as one of the events on the lineup of the Elevandi's calendar, GFTN's calendar. This year, May, we had an interesting event with almost 8,000 people in attendance. So come out there. If you've not been into Africa before, I think it's a great opportunity to meet people from all across the world and from different backgrounds as well, regulators, innovators, investors, and get a feel for what's happening on the continent. And we're happy to discuss further. Thank you very much.
Thank you, gentlemen. This was exciting. And Japan in March.